does that dollar weakness continue?
I think in the short term it probably could. I think the inflation print was kind of meaningful because the component that the Federal Reserve is looking at, which is core services ex shelter, was 0.1%. You know, the last 3 months it's been at average 0.4%. That's the lowest level since July 2022. So the US is all about the service sector. If you're seeing service sector inflation slowing, I think it does support the case that they'll probably pause at the June meeting, which is our view as well. Does this mean a resumption of the broader dollar downtrend? I think that's far from clear because you have a lot of risk events coming up. You have the debt ceiling, you have still the regional bank uncertainty, and all of that stuff makes it a bit tricky for the overall dollar trade. But in the short term, I think the CPI inflation probably means the dollar trades a bit weaker in the very near term.
You have a whole report about what pause effect means for the dollar. I mean, what have previous hiking cycles tell you about what happens to the dollar?
Yeah, I think it's far from clear. So I think a lot of people say, you know, once the Fed pauses, that's the time for the dollar sell-off to accelerate and continue. But past Fed tightening cycles are not really consistent with that. You don't really get the big dollar turn just as the Fed starts pausing. It usually takes a bit of time. And that's why while we do expect the dollar to weaken during the course of 2023, we do think it'll be kind of a second half story rather than necessarily a second quarter story. I think in the second quarter, the dollar's going to be a bit more range bound. You can't rule out some dollar strength if there's risk off. So maybe right here, right now is not the time to be putting on those big medium-term dollar shorts.
Well, I mean, you saw what happened with Volcker. The thing is, he is, in many ways, the icon that Jay Powell does follow. And he did actually stop cutting interest rates on both occasions in 1980 and 1981, 2 months before we saw peak inflation. So have we seen peak inflation? It would seem that that would be the case.
Yeah. So we've seen peak inflation.
They should be pausing, shouldn't they? I mean, really.
They should be pausing. I think any central bank should be relying on its forecast. So if the Fed, I mean, the staff projections of the Fed is calling for a recession in 2023. So you should pause and wait and see. The problem, I think, not just for the Federal Reserve, but other central banks as well, is they've been relying less on their forecast. They've been relying more on coincident data because they got the inflation forecast so wrong.
Right.
So I think if the Federal Reserve starts to rely a bit more on where its projections are 1 to 2 years out, definitely they should pause.
We spoke with the Citigroup yesterday, Joanna Chua. She was here in the studio with us. Let's play the tape. I want you to react to this because they think they're still going to hike.
We think the Fed's not done until July, so we're a little bit more hawkish. So you can imagine we're definitely going against what the market is pricing in rate cut. We do not expect the Fed is really going to move until next year. And therefore, as they're going to hike further, we're probably going to have, you know, a grind towards a recession by starting, you know, with a contraction in fourth quarter.
The dual mandate, inflation probably hold. The job market, maybe you need a hike.
Yeah. So the job market kind of tells us that it's going to be hard for service sector inflation to come down to a level that's consistent with that target.
Yeah.
By the way, I completely agree, no rate cuts this year. So our forecast is for the first rate cut in March 2024. But I think for the pause, I think just from a risk management perspective, it does make sense to pause and observe the data. And then if you have to hike, you hike again. By the way, a central bank has done that. The Reserve Bank of Australia has paused and then hiked again. And that should be the template for central banks. You pause, you assess, you think about lead lags. And if stuff is not coming down, if the unemployment rate is not moving up, you hike again. And that's the way the Fed would think about it.
So if they underestimated inflation before, are they underestimating a recession?
Well, officially they're not. Officially they're calling for a recession.
We don't know that.
Yeah. But it's possible. I think the Fed has always tried to tell the U.S. economy, U.S. households, tell the market that a soft landing is possible. It's not a narrow path. It can happen. So maybe you can argue the risk of a recession is somewhat higher than what the Fed is thinking at this point.